Hey traders, Raghee here, and in this video we're going to talk about the time you want to be focusing on day trading. Now, I think a lot of traders feel that they can day trade all day, and maybe some can, but when you're looking at 1 minute time frames, or even 2 or 5, you're looking at a lot of individual candles, a lot of decisions can be made, and you're pretty susceptible to that dopamine of that new trade, that new setup, and it can lead to over trading if you engage the market for a prolonged period of time. So let's get really specific. Now, eventually, if you want to trade the whole day, cool. But let's start with assessing how the market behaves at 7 a.m. Not trading, but rather assessing what's going on starting at around 7 a.m. I call that when New York is pouring its first cup of coffee. And by the way, you can join me from 9 to 9:20 for our Charts and Coffee show at the Simpler Trading Facebook and Simpler Trading YouTube channel. And I do that every day, Monday through Friday, before I go into the Simpler Futures room to trade for that morning. So definitely check out the Charts and Coffee. All right, so the U.S. market sort of gets going. You'll see the volatility start to increase at around 7 a.m. Eastern. Okay, so this is East Coast time. The bell rings at 9:30. And the idea is what? Now we know the volume, the volatility have increased, and they're going to stay that way for about 2 hours until about 11:30. Look, try this for a week, okay? Stop entering new trades, or at least wind down your trading and wrap up, or think about exits and trailing and break-even stops starting at 11 a.m. Eastern. Now, what happens to a lot of traders is rather than starting to think about what's going on at 7, they actually start getting going maybe 9:15, 9:20. So it's going to take a little while to warm up. And by the time they're warmed up, it's 10:30, maybe 11. And you'll see those traders will start to put out trades later in the morning. Start warming up earlier and you're ready to go at 9:30. Now, ready to go for what? Well, a couple of our traders in the room, once you know the kind of setups that I teach, you can be a whole lot more self-directed. And a couple of traders in the room said, hey, Rag, we took some V-score low entries right after the bell. And I thought, yeah, it was quick, but it was valid, right? So if you're ready to go at 9:30, not warming up, you look at something like this and you realize that's an opportunity to potentially get long from a nice fatigue support level during the clearing period. Some of the things that we did today were focused more on the Dow, the S&P, and the NAS. Now, in the premium video, I'm going to talk about a really important concept, and that is the idea of a time-based stop. Now, we've kind of discussed time-based starts in this video. We're going to talk about time-based stops in the premium as well as other markets that I've got in focus for next week. But again, just for a week, even for a handful of sessions, try this approach to time. I think you're going to notice a very, very good result to it. It's going to make a difference in your focus. It's going to make a difference in your accuracy rather than sort of spreading yourself thin throughout the trading day. Think about emphasizing those first 2 hours after the bell, and I'll see you in the next update.